Good morning. Happy new week, new Monday, July 28th. Zach Howard, morning market update. Are you not entertained with the theater that is continuing to be our Western world of politics, central banks, and markets? It is like the Roman Empire back with every day at the Colosseum. They would have the bread and circus, free bread to the participants to come and watch the show. And that seems to be the media. If you haven't checked out this clip last week, from Powell, Trump, and whoever this other guy is in the basement of the $3 trillion federal building. It speaks truly to where we are in 2025 in the world. Entertaining as hell. Don't take any of this stuff serious because it's all theater. Further to the theater, we are on the theater week where the central bankers parade out in their suits and ties and pretend to opine on the rate of risk for the global financial world. Somehow they have their handle on the pulse to this fiat money machine. We have the Bank of Canada out this week with its rate policy decision and outlook. And 5-year Canadian bond yields have elevated 20 basis points here in the last 3 weeks, which is going to cripple their style, kind of wanting to ease policy here on the shorter end with all the renewals on Canadian mortgages coming up here this year. Bank of Japan, arguably they've overplayed their hockey's hand and being able to say, yeah, we're actually going to do something about our rising rates. Dovish meeting coming there. The currency is kind of reflecting that. And the central theater in chief, Powell versus Trump, will you cut rates? Will not cut rates here this week as well. So should be entertaining. But back to the realities of volatility in markets. Volatility continues to crumble, melt away like an ice cube in July. Looking at the bond market, the U.S. Treasury volatility here, the MOVE Index, MOVE, Liberation Day shot right up here to 140 and melted all the ways down here to 82. Looking at the SPX, the S&P 500, the gamma volatility trial, 10-day realized volatility, the lowest has been in a year, 5.51. All these green lines, this is where we're to currently on that mechanism of gamma volatility through the dealer mechanism. We are in by the market, by risk. That is what this continues to be. Looking at the lens of the VIX, new lower lows, lower highs in the VIX. In the bearish trend, it continues to fall below 15 on Friday there. The Russell volatility continues to come down. In the last week, 146 basis points, almost 200 basis points in the last month. The NASDAQ volatility, 17 range. It's come down 400 basis points in a month. Gold's volatility, which really doesn't move a lot anyways. And even oil, it's come down big time, down to 32 in a month. So volatility is collapsing across the board, which puts a bit into these alternative trades, which are crypto, which are Ethereum, which are Solana, which are your favorite shit going out there. It's not a product of a white paper by Tom Lee on Ethereum or Raw Paul opining how Ethereum is going to take on the world. It is a product of volatility. It's math and how the market moves through the machine of the lens of volatility. So last week, flows into those Ethereum ETFs actually surpassed the daily flows in the Bitcoin ETFs. Surprisingly not, if you're looking at it through the lens of volatility. In my notebook to start the week, we got the big mega caps reporting this week. We got Microsoft near all-time highs into earnings, higher lows, higher highs. We got Meta, Apple, and Amazon all reporting earnings this week, which are also now catalysts going forward because once their earnings are reported, they can then buy the dip in their own stock. Most of these companies like Apple who don't have innovation have not adopted the AI technologies as much as Meta, Microsoft, etc., Google. They're just going to continue to buy back their stock to make the return for shareholders quicker there. Now, once they report earnings this week, this type of concentration will continue to manifest. I see higher lows, higher highs across the board. S&P 500, NASDAQ, Russell, those mega cap stocks, and we have volatility following. Also in my notebook, the Bitcoin to gold ratio back up to 35.6. I think we make a run to 120 here on Bitcoin here this day, Monday, July 28th. Sailors out buying more. The most successful IPO this year in 2025 with his new equity offering there, raising over 2 billion in fiat to buy more Bitcoin. That is the playbook. Back to the beginning of the slides, the theater of it all. Zoom out. Look what the real denominator is for all this stuff. Have a great day, and I'll see you tomorrow.